Good afternoon, traders. This is Lee Lewis with Trader for Traders with the market update for Thursday, November 4th. All right. So what do we have going on today? I had a bunch of inflationary numbers come out of Europe and England this overnight my time, but they were all stronger than normal or predicted. So the composite, the PMIs were higher than predicted. We had the British Global Services PMI, composite PMI, come out higher than predicted. Producer prices fell a little bit year over year in Europe. And then in the U.S. session just before the equities open, we had the ADP national employment come out minus 32, basically saying that ADP is the U.S.'s largest private payroll company. So they have a pretty good pulse on the condition of the labor market in the U.S. And in the absence of any consistent labor numbers that we're getting from the U.S. government, this release, which normally is a secondary or perhaps even tertiary release during the week of the non-farm payrolls, has taken on an inordinate level of importance. And the market reacted to that today. We saw, with this minus 30 to negative 32,000, we saw a dollar sell-off today. The dollar index was down against the Canadian dollar. That's always an odd thing because there's the oil factor coming into that. But continued to fall against the yen, against the Swiss, and the euro, sterling, Aussie, and Kiwi were all up and stronger, continuing their path, reflecting a weaker dollar. Because what we saw with the result of that was that the likelihood of a rate cut is now 84%. I think a couple of days ago it was 79%. Now it's 84%. And of the 25 basis points predicted, the market's already factored in 21.3. So this cut is almost 100% factored into the market. So we're looking at a weak dollar. We're looking to continue to trade with the trend. So what do we have upcoming that might put a monkey wrench in that plan? Well, nothing coming out for the rest of the day. Australian goods and services, it's marked red here, but I don't really see that moving the needle. Coming into Thursday morning my time, Swiss unemployment, that's not really a big number. A little bit more in the European inflationary numbers, see if those continue to match and follow the results from yesterday. Same thing with the sterling. Keep an eye on those. But I think the real big number coming up is going to be the initial jobless claims. The Fed's just so focused on employment numbers in relationship to inflation when deciding whether to make a rate cut that this is pretty much going to be the focus for tomorrow, and this is what I'm looking at. So even in that context, this is not a non-farm payrolls number. This is the weekly initial jobless claim number that used to be a nothing burger, but has since, over the past year, taken on some more importance. But even if it comes out a little wacky, it's still not going to move the market tremendously. So I'm still looking to trade a weak dollar. Looks like the Trump administration is focused more on resolving wars and starting wars than focusing on the economy right now. So I think the chance of a Trump tweet coming in and wrecking everything I was just talking about still remains pretty low, although as we know, it's not a non-zero chance. So I still really like the Swiss. I called it earlier in the week that right around here we could expect to see the dollar come down. Took about a day to actually start doing that, but about this time yesterday it started to go down, continue to go down, hovered right around the 80 cent mark that I was mentioning. Now it's come a little bit below. It's retracing that 80 mark. I expect we'll see this come back up to oversold, might get up to 805, maybe 80.10, and then come back down as long as we continue to track that weak dollar move. So I'm going to use PTP. I'm going to put this on, same trade as I had last time coming through here. Hopefully to get another 35, 50 points out of it, and just let that train run until the market tells me otherwise. So that's what I'm focusing on. I'll leave it to you to do your own analysis and see if you can find a better setup. But I think out of these majors, we've got, I think, sterling's kind of peaked out here, really set for a big retrace. Same thing with euro I think Aussie and Kiwi are on that same way. So I'd be looking to buy the dips on those. I'd be looking to buy the peak to sell the peaks on the Canadian dollar and the yen pairs, and just continue that weak dollar until we find something else to trade. So that's what I'm looking at. And until we talk again, happy trading.